Hey guys, it's Realtor Renzo. Just wanted to give you guys another market update and just talk about the recent moves that the Fed has made, the Federal Reserve. Now that we're going into 2023 in a few months here, I think, and we're kind of moving into this kind of new era, this post-pandemic era. So I think it's kind of a useful kind of tool to kind of look at these graphs and look at the future in the new year in a kind of new light. So I thought it would be appropriate to kind of talk about that and then talk about house prices and contracts and supply and all that stuff. So we're going to get into it. So again, the Fed is increasing interest rates as the way to combat inflation. Inflation is, the increase over time of the value of certain goods, and so as we've seen during this pandemic time, the prices of general goods across the board has increased, and certainly that has happened for houses and real estate. And so I wanted to talk about whether or not I wanted to talk about whether or not the Fed's decision to increase interest rates has actually made an impact in the real estate industry. And so first we'll look at sales price, and then we're going to look at the number of contracts there is per month and the general activity and enthusiasm in the market. And that's just going to go under this umbrella of demand, because what the Fed wants to do is, with the increasing of interest rates, is to lower down demand. And thus, if you lower down the demand, people want it less, and therefore it's not valued as much, therefore decreasing inflation, decreasing the value, and slowing that rate of increase down, right? So, and then we may have to kind of look at other things too, and look at it from a supply perspective, because I think that'll offer some insight of why prices may not be going down, or may be a little bit stubborn to go down in the next year or so. And again, no one has a crystal ball about these things, but we surely can make some predictions and some educated guesses moving forward. So let's look at first, we're looking at it right now. Again, we're looking in the past 3 years, single family homes of all price ranges, all types, all sizes. And so we're looking from 2019 to now. So we're looking at sales price, and we're looking at the median sales price. Clearly has been increasing, right? Inflation during pandemic era from 2020 to now, pandemic time, we saw an increase in inflation, right? So we look at median, now we're looking at average. Wow, right? We're seeing, this is what inflation is, right? The increase of general prices, right? That $5 foot long is now a $10 foot long, right? The dollar meal is no longer a dollar meal. It's like $2. That's what inflation really is. And the Fed, because they're raising interest rates, wants to decrease that, because interest rates will make loans a little bit less attractive, because if you have to pay more money, interest rates is basically just paying more money. So you can substitute increasing interest rates as increasing the amount of money you have to pay back, right? So no one wants to pay more money, so of course those loans are less attractive, right? So we have these prices increasing, but is demand, and hopefully what the Fed wants to do is that he wants these prices to teeter down. He wants these prices to go back down to kind of closer to where they once were in 2019 and 2020. And here's what's really interesting. If we look at the past 10 years, like, the value of property does increase, right? We just have to wonder whether or not it's increasing a little bit too fast now. Because if we follow like kind of a general trend line, we're kind of higher than we should be. And it's a little volatile right now, as you can see. Let's go back to 3 years. Okay, so has demand actually decreased though? And is demand actually showing signs of decreasing so that these prices will go down? Let's look at the total number of things going under contract, right? So how many properties per month has gone under contract? As you can see in the past year, 2022, in the past year or so, the total number of contracts per month has been going down. That's really interesting. Maybe the barrier to entry and the cost of these loans have been so expensive that people are just sending in less contracts. Ain't that interesting? So maybe demand is going down. How many contracts ended up going to closing in the past year? Wow, it's actually going down. So the total number of contracts going to closing is going down. So how many showings now lead to contracts? Okay, still decently high, but we're seeing it teeter down, maybe? So how many total closed sales were there now? So this number is also going. So the total number of things going under contract is going down, and the total number of closed sales is still going down. But mind you, let's pay attention to 2019, we're still above 3 years ago, right? Maybe we're returning to regular levels here, but we're still above, we're still at higher rates. Okay, so demand is going down, right? Right? Because less contracts are being put in, sales are going down, contracts to close are going down. So clearly demand must be going down, right? But let me show you something interesting here. Showings per listing is still high. So people are still dedicating their time, their afternoons, their mornings, their weekends to seeing properties. People are still interested in buying. Let's look at how long listings are on the market for now. Wow, things are still going fast. So this is the total the average amount of time listings are on the market. So the longer it is, the higher this number, of course, right? And this can just show general interest, right? The lower this number is, the quicker it sells, right? If it sells quick, then that means people want it, right? So things are selling really quickly. 42 days on the market as compared to 84 days on the market in 2020, right? So we just said demand is going down because the total number of contracts is going down, but clearly people are still dedicating their time to go see it, and listings on the selling side are still selling really, really fast. So maybe we have this perception of demand kind of skewed, right? Maybe demand isn't really going down. Maybe the barrier to entry to get these loans is going down. And maybe, you know, these showings per listing, maybe this will go down in the next year or so. Maybe this will go down in the next year or so. And maybe this will trend downward. The sales price, average sales price will go down. Who knows? Maybe there's just a delay of the effects of the total number of going contracts. Maybe there's just a delay in the effective price.